Get in Amisha Vora as well, joint MD Prabhudas Lilladher, who joins in on the show. Amisha, apart from 10,000, apart from Reliance Industries, we've chosen to talk a little bit about some of these high beta stocks that are running away in trade and where, sounding warning notes across that, given the kind of price movement that you've seen, one's risk appetite needs to match that, and it's not necessary that the fundamentals match the kind of move that you're seeing in the stock. What's your take?
No, I think overall, a lot of money domestically has been pouring in. That is also because of the past returns. But somewhere I feel that because of the past return, money can come now. But because money is coming, returns will not come in the future. So I'm turning for medium term or short term a little cautious in terms of returns from here on. Of course, the stock specific actions will continue and that will still give opportunity, but it will become selective from here on. I think a lot of things we have discounted at these levels and these prices. And looking at some of the turnaround stories, in case you're asking about JP Associates or somebody, I think they've really done a marvelous job in terms of shading a lot of their assets as well as debt and keeping their intent very clear and straight in terms of being being able to bounce back. So will be over next 2 to 3 years they would be rewarded very well because of that.
Fair point, Amisha. Amisha, from last 2 years, every expert who's come on the channel has made this very qualifying statement, which is that Bajaj Finance is a great company, but it is an expensive stock. And wait for a bad day or a bad patch to buy. Now the problem is that bad patch is not coming. An expensive stock is becoming more expensive, and now it is in the category of super expensive.
I agree, and if there is, as they have decided to raise money at these levels, it will give further boost to their book. And then it will for some time start looking, in terms of price to book, a little more or less expensive. But really can't help the fact that at this level of the size of the book, they've been growing at this rate. So the expensiveness will continue till the time the growth continues to be so high and so profitable and so quality. So I'm also, of the camp that this is costly, but this will continue to remain costly.
Quick outlook, Amisha, on the GST impact on earnings, what you're expecting and how you've read into it so far.
So I think very broadly it has been impacting some of the domestic consumption volumes. Be it levers, I think the volume growth was not something so great, though margins have been better. And I believe that in domestic consumption, we will see some of the impact as we have been talking that from middle of June to middle of July, there had been slowdown in destocking, stocking activities, and now also things are bouncing back. But I think looking at the overall tempo and mood of the market will take it into its stride, and this will not be the main cause, but for any major correction of the markets, GST will have its own pain and slowdown for this quarter and little more for the running quarter. And I think by Diwali time we should be back to normal.
Okay, Amisha. Thank you for your valuable time.